So traders, what I want to do in this video here is I'm going to play this video here is from Tom Lee shares his thoughts amidst the bad year start. This is obviously a reaction video to that. And I really want to share something with you because over my last 20 years, okay, I'm doing this video because I really want to help you. Okay, I'm trying to give you basically a 2-decade shortcut of how we should be thinking about these markets here. And I really want to share some things that one of the biggest mistakes we're making these days is that we're looking for people like this that for example with Tom Lee. Now I'm not having a go at Tom Lee here, okay? I'm not bagging him out or saying something like that. I actually like Tom Lee. I actually like his thoughts. But one thing I want you to sort of understand as well too is that if I just bring that down through there is that one of the biggest mistakes a lot of people make is that they take in basically what they take in. Let me just do this here. Okay, cool, right? So they basically take in what someone says on CNBC as factual evidence and what's likely to happen. And this is where, if you're a trader of these markets, it is so important that you literally understand these markets and you understand what's happening. Now, if you've watched my videos for the last few weeks, what is the number one thing I've been saying about the stock market? I've been saying, traders, the stock market right now is overbought, right? We are overbought right now and we're likely to get a pullback, right? And just by using simple analysis by how the market works, by one flowing like this, which is ups and downs, but also secondly, getting too far away. So we're due for some sort of a pullback, right? So this is just nothing special. It's just two different things. One, just understanding that after a period of market going up, we're likely to get some form of a pullback. So what I want to do right now is I want to play this video here for you, and I want to share with you something here. So let's actually get here.
Fundstrat's Tom Lee. Happy New Year. Welcome back.
Happy New Year, Scott.
Are you wavering at all by virtue of what's going on this week?
We're not wavering, but it's clearly not a good start to the year. I mean, markets almost got to an all-time high at the end of last year, and the first 4 trading days of this year have been really terrible. I can see what the market's struggling with because, as your guest previously talked about, part of it is when the Fed cuts, and I think people are still jumpy about a strong labor market and if inflation is softening. But our base case still remains that, we're going to see all-time highs in January, and then I think the market is tough in the first half of this year because of some of those things, but we'll overall end up strong by the end of the year.
But you're not rethinking your own outlook at all by, how, you obviously sound somewhat concerned by the way this year has started. Maybe it didn't go according to your plan. So how's that all factoring into your psyche?
Well,
now, one thing I want you to understand as well too, traders, is that Tom Lee was at the end of last year. He was saying that I'm expecting this thing just to keep going up. And for me, in my analysis, when I looked at the charts, I'm like, okay, there might be probably maybe 10 or 20% chance of that happening, but there's an 80 to 90% chance we're going to get some form of a pullback. And again, if you've been watching my videos, you've been knowing the techniques I've been using. So, okay, well, just understanding how the markets work. And again, and this is not me bagging Tom Lee out. This is just me having a reaction to that. I'm just trying to share with you and teach you where a lot of people go to YouTube and say, oh, well, Tom Lee's an expert and these people are experts, so they know what's happening. The number one thing, right, as you can see, I called this pullback that's been happening in the stock market with the Nasdaq right now, and the Russell's been pulling back. And so I really want you to see that there. Let's continue here.
Yeah, I think it is disappointing because, the year tends to play out in January. So the fact that we're sort of had a failed Santa Claus rally in the first 5 days is pretty important, and the market looks like it's going to be negative. Just tells you that the fundamentals which have been improving aren't necessarily going to convince investors to be buying stocks. So I do think it's telling us it's going to be a tough year. But the reason we're not wavering is that the reasons we think 2024 will be a good year for stocks has to do with the fact that the PMIs are bottoming and inflation's falling like a rock, and the Fed has pivoted and is now managing a business cycle. Those are really good anchors and supports for why stocks can do well, but it's not a great start. I mean, it'd be much better if we were up for the week.
Yeah, well, I mean, bulls would feel better. What about this ISM services report? I mean, I know you talk about PMIs, but is that concerning to you?
Well, it's there's pluses and minuses. I mean, to me, I think the ISM services employment number and the manufacturing number show you that the labor report we got today may not be as strong as it looks, and I think that's actually good because we don't want a labor market showing signs of rejuvenation. I think the trend there is sort of softer employment growth. And from a prices perspective, I think it's pretty supportive of what we've been seeing, which is, prices are falling, and as long as housing and cars don't surge, housing growing at 3% is fine. That's consistent with 2% inflation. I think inflation is going to eventually be viewed as, approaching target, and that's actually good. So, Scott, the data isn't always in a straight line. I think it's a little messy this week, and I think it is disappointing to see, but I think too many are going to be quickly turning bearish and then put on their hard landing or skeptic hat or the Fed hawk hat, and I think that's going to prove to be a mistake.
So you look for about 10% out of the S&P, but more or less is what you think we're going to do from here. How many cuts do you need to get that?
Well, it's not as dependent on cuts as it's dependent on really inflation approaching.
And do you see what happened there, traders? So Tom is saying he's expecting a 10% increase out of the stock market this year. And the person at CNBC said, how many cuts do we actually need to get that? But if we actually, and this is where, guys, sometimes if you watch a lot of, I was actually talking about this actually with a private client recently as well. Actually today, yeah, because I'm with my private clients every single day. And I was talking to him, actually, Jono, his name's Jono, and I was talking to him actually about that, and he was saying, yeah, one of the mistakes that he's been making is that he's been going to the media to look to see what they're saying and then trying to make a decision in the markets based off what they're saying. And as you can see, it was always the wrong sort of thing to do. But as you can see, right, they're talking saying, well, if the stock market's going to make another 10% increase, well, sure, there's got to be how many cuts do we need for that? But hang on a minute, we've had no cuts, and the stock market had an incredible rally in 2023. So as you can see, right, we start to put all these theories and opinions and all these things about why we need cuts for the stock market to rally. But hang on a minute. Look at the stock market last year. So anyway, continue here.
What we'd all accept as close enough to 2% so that the Fed is no longer fighting inflation. So it's not going to be as important as cuts as really sort of the quality of the inflation data. And I think the second is that, we do need to have a rebound in earnings and global growth, which I do think is underway. And, as you know, inflation is normalizing outside the U.S. And when you have that combination of inflation sort of normalizing and real growth recovery, I mean, that's good for stocks. So it's not dependent on the number of cuts.
Well, I don't know. I could almost make the argument that it's one and the same. I mean, if you get the number of cuts that the market has seemingly priced in, it means that
Anyway, I'll stop that there for now. I mean, they just keep going on and on and on. I guess as you can see at the start of this video here, and I really wanted to play this video here is, again, I must repeat myself, I'm not bagging Tom Lee here, okay? What I'm trying to do is I'm trying to share with you that for my last 20 years, I've gone through this process, and as you can see, Tom was expecting a really good bullish move for the year. But when we actually looked at the market, the charts, right, and this is where if you are trading the markets, I mean, you're getting in, you're getting out, you're not an investor, but you're simply just a trader, then you simply cannot make a decision based off anything else but from what the market is telling you. And utilizing the tools that I've been trying to teach you over the last few weeks, the simple tools like when the market goes up for a while or goes in a direction, we're likely to get what? When it goes up for a while, we're likely to get a pullback. When we go up for a while, we're just likely to get a pullback. It's just how fundamentally of how the markets work, right? And then also we're too far away. Now, yes, of course we could have actually had another move up here, but it probably wouldn't have been too much. Why? Because we're already too far away from the 52. Now, I know this sounds pretty simple. It's like, oh my goodness, John, here's a fundamentalist and looking at all these different fundamental reasons why we should have seen a really, and then as you can see, Tom's like, oh my goodness, it's actually, we weren't expecting to see such a bad start to the year. But the whole thing about this, traders, I hope you can see, like, to make it really simple for you, if you're spending a lot of time on these platforms trying to make a really good decision in the markets, you are really doing yourself a dissatisfaction. As I was saying with one of my private clients recently, he was saying the exact same thing, as in, like, you know, he was saying that he always used to go to the media to make a decision, and the number one thing we need to do to make a decision in the markets is looking at the charts, because we can't use a fundamental. I'm pretty sure if you guys have been trading the markets more than 5 years, you've seen many times when things seem to be dire straight, aka last year, right? 2023, right? 2023, and if we look at the actual markets itself, right? 2022 down to here, start of 2023, that's it. Interest rates, inflation, recession, debt bubble, blah, 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 all this sort of stuff. And the market actually had a big rally. So it's like, and again, it just doesn't make sense, does it? Right? It doesn't make sense. And there's been many times when we've actually had pretty good news, and earnings comes out, amazing earnings comes out about a particular stock, and yeah, it may rally a little bit, but then suddenly it sells off for 2 or 3 months, right? I've seen that so many times, and I'm pretty sure you guys as well too. The purpose of that is that I no longer put, and I haven't done for a long time, I no longer put any emphasis on what the media says, and I only put the emphasis on what the chart is telling me. And once we can simplify the process of that, and not try to go to the media, say, okay, what's going to happen next, and actually really start to look at the charts and just simplify some really simple things, you really can start to get ahead. You really truly can. And I hope you can see here, again, I'm not bagging Tom Lee out here. I'm just trying to share with you guys that these people that go on CNBC, that it's, yeah, they say one thing, but then if you go look at the market, because guess what? The charts are the truth. Charts are the truth. That's it, right? Nothing else. Nothing else really matters. The chart's the truth. Why? Because we trade the chart. And if we understand fundamentally of how the actual charts work, how we get too far away from the 52, then we're likely to either go sideways for a while, or we're likely to get a pullback, or we're too far away from the 52. You know, just something simple as that. Now, we're not talking about an actual trading system here, right? We're just talking about some simple analysis to help you have the odds on your side. If you do want to actually learn my trading system, go to johnsfreetraining.com and you can join my next webinar, and I'll teach you all my details to my trading system for free, right? I teach you for free. And again, so I'm just trying to share with you here, guys, that this is what it's all about when it comes to your trading here. So I hope you can see, guys, that the truth about you getting ahead in the markets, and I did a short recently when I was at the gym, about you getting ahead in the markets. So let me play this for you here right now. So if you've been trading the markets now for the last few years, by the way, I'm at the gym. Get ready for a gym workout. If you've been trading for the last few years, do not be telling people that you trade the markets. All they say is, you can't do that, that's risky, that's gambling, and there's so much weight on your shoulders. You're gonna fail, you're gonna fall down, you're probably gonna blow a few trading accounts up, you're gonna get a few setbacks. That's what's going to happen, right? It's gonna be hard, you're gonna feel like quitting, but don't quit. So do not be telling people that you trade the market, especially for the first few years, because it's going to put all this pressure on your back about you trade the market. You can trade the market. You can. All you have to do is understand a few things about how the markets work, what you need to do to become a really good trader. But do not be telling people that you want to become a good trader, because the first few years, probably even your first 3 to 5 years, you're really figuring it out, who you need to be, how to understand the markets, and so on and so forth. So you got this, don't quit. Anyway, so that video there was obviously just to tell people that, you know, when you're starting out, sometimes when you tell people you trade in the markets, some people are like, oh, is that gambling? And you know all the bullshit that actually comes along with that. So I was just trying to help people out there. But one thing I did say is about as you're trading, it takes a long time. It takes a long time to get on the other side. And again, I'm 20 years now deep into this, and I'm just trying to share with you some of the things that I've learned. Is that no matter what this person here is saying, the number one thing was the chart. And as you can see, the chart was actually the thing that actually said we're likely to get a pullback, which I've been talking about, and we actually got the pullback from there. So anyway, traders, I hope this helps you out. Again, this whole video here was just to try to really help you and support you that Whenever you're making a trading decision in the markets, it's so important to make a trading decision based off what the market is telling you, because guess what? We trade the market, right? We trade the market. The market doesn't follow a fundamental. Now, it may follow a fundamental overall, but again, I use the example of everything looks really, really bad and the market goes up. There's been really good earnings reports and the market goes down. So you just can't really trade on that. The best thing to do is just keep following along with what the market is telling you and simplify that process there. So have a great day, guys.